I'm Caroline Hyde. This is the best of Bloomberg Technology, where we bring you all our top interviews from this week in tech. Coming up, this week, Snap officially filed for an IPO with an initial size of $3 billion. All the long-awaited details ahead. Plus, Apple's sales are at an all-time high and Facebook sees mobile ad revenue pop. We'll break down the big tech earnings of the week. And the inside track on GE's digital pivot. CEO Jeff Immelt shares how America's biggest manufacturer turned to big data and won in a Bloomberg exclusive interview. First, to our lead. This week, Snap filed its long-awaited IPO with an initial size of $3 billion. The company plans, though, to raise as much as $4 billion in the IPO for a market value of as much as $25 billion, according to people familiar with the matter. The parent company of Snapchat is the first US social media company to go public since Twitter did over 3 years ago. The company's IPO prospectus is the first opportunity for outsiders to get a closer look into the company that's known for its culture of secrecy. We caught up with Bloomberg's IPO reporter Alex Barinka, Bloomberg Technology Sarah Fryer, and Phil Libin, Managing Director of General Catalyst, whose firm happens to be an investor in Snap.
I was looking at a revenue of $404 million last year and a net loss for the same year of $514 million. So you can see there just how much cash this company is burning through. And I bring that up because we've seen the headline daily active user numbers, we've seen the revenue numbers, but we didn't quite have a sense for how much they're having to spend to get there. This is the first glimpse that the investors will really have to take into account. Can I balance the amount they're spending with the prospective opportunities that they're pitching to me when I'm trying to get to that $25 billion market valuation?
So, Sarah, when you're looking at the business model in general here, we are seeing a secretive company coming out, having to disclose that it's making significant losses at the moment. But that sort of valuation that we're seeing, do you think it can be vindicated?
Well, I think the thing I started looking at very intently was the risk factors that they list. And in there are a lot of familiar things. There is the competitive landscape, the fact that it keeps getting copied by Facebook and Instagram, these companies that have a lot more resources and reach. There's also just issues like, you know, the founder control. Alex mentioned that we're going to have to see if we want to bet on this company long term. The founders are going to retain the majority of the voting control and will have the majority of the decisions.
And leave out to Facebook's book.
Yeah, and then the user growth. After Twitter's IPO, that's the number one thing people are talking about. The user growth at Snapchat, it's 158 million daily active users. It's good. It's more daily active users than Twitter has, but it's just a little bit more than Instagram has for the product that copies Snapchat.
Exactly. So when you're comparing 400 million daily active users,
right? Instagram has 400 million overall.
Phil, we've got to get. First of all, we've got fascinating approaches from you because we've got you as obviously the founder. You were the co-founder of Evernote, but also now in your role as a VC. I've got to get to first. General Catalyst is an investor in Snap. Before you came on board, is the timing right? What makes this attractive?
So we are investors, so I don't want to say too much. The company hasn't revealed so far, but we are super excited about Snap. You know, very few companies really get to change consumer behavior as profoundly as they did. You know, maybe 3 or 4 over the past decade. So they're an extremely good company, very consequential product, and just really amazing execution. So I think the enthusiasm for Snap IPO just really bodes well for the rest of 2017 in technology.
Then we have a company that's exiting, the investors that they're trying to woo at the moment, Alex. How excited, how willing have they been to absorb this sort of data?
So this is a very down time for tech IPOs. There hasn't been a lot of new issuance out there, so that does bode well for the Snapchat listing. And frankly, they haven't been able to make a big bet where there's a lot of shares being offered that promises returns, that promises big growth, which is what Snap is pitching here. And as they kind of cycle through, you know, digging into the S1, looking at the first few pages, the colorful images that Snap is promoting, we do see a lot of looking back on the past development. We don't see a lot of road mapping going forward. There's a lot of strategic vision being laid out, but again, to Sarah's point, when you look at the information that investors are going to digest, you're going to have the numbers, and then you're really going to have to believe the story that the management is pitching throughout the roadshow when you're deciding whether to open up your pocketbook.
Phil, when you were at Evernote, you didn't go public. What are the trepidations as a founder when you're looking to go to the market? Why perhaps isn't there being as much meat to the bones in terms of the future potential of Snap really being put in this S1 right now?
Well, I think it's always a trade-off between access to capital and how much distraction there is. And as a CEO, as a founder, you pick the best combination of that. So where we were at Evernote, at a much smaller scale than Snap and at a different time, it was easy to have as much access to capital as we needed on the private markets. And frankly, going public is a lot of work and kind of a distraction, because then you wind up having to be a lot more open and match Wall Street time estimates. You know, a company like Snap is doing amazing innovation. Like, look at all of the products they've built, their work on augmented reality, the wearables. They probably have a lot more stuff that is in a longer time frame than the next quarter, the next quarter, the next quarter.
And to your point, Snap has said that its performance will be, quote, lumpy, right? That they're going to have to make fits and starts of investments in new products and strategies, and that their DAU growth may not be predictable, their revenue growth may not be predictable.
But it's the addiction, isn't it, as well? When we're looking at 158 million daily active users, it's not so much the number they want you to focus on, it's the fact that they're going back every
Daily.
hour, every minute.
Yeah.
Right. They're so engaged.
The engagement and the behavior change. And this is why I think it is a really good time for Snap to go public, because they've just done something to transform the way hundreds of millions of people live their lives. And it's morally great to give everyone who wants to be an owner of that the opportunity to do it. So I think they're at that stage where it makes a ton of sense.
Sticking with Snap, how does the disappearing photo app actually make money? Well, Bloomberg's Sarah Fry and Alex Barinka report.
Don't know how an app that sends disappearing pictures actually makes money? You're not alone. The first thing to know is Snapchat isn't just about sending selfies anymore. Now they're pitching themselves to investors as a camera company.
And unlike Facebook and Twitter, Snap isn't just about ads in a native feed. In fact, core to their concept is creating content. And that's what its 5 revenue generators are all about. Lenses, geofilters, Snap Stories, Discover, and Spectacles.
First up, Lenses. Open up the app and boom, you're straight into the camera. Brands can then pay up for filters that you can overlay onto your photos or videos and then send them to a friend or to a group.
Geofilters do something similar, overlaying the where and when that businesses or people can pay to include in the app. Now, I can also send my snaps to my Snap Story, a feed that friends can see before snaps disappear after 24 hours, which brings us to our 3rd revenue generator.
Our Story. It's basically a group feed that Snap goes through and grabs publicly posted snaps and puts it into one video feed. You've seen this around events like the Women's March or Trump's inauguration.
And everyday people aren't the only ones uploading to Snapchat. Enter Discover. Starting in 2015, brands including People, BuzzFeed, and ESPN started uploading mobile magazines that create stories in more millennial-friendly versions, with ads slotted in between, of course.
And you can't forget the spectacles. You can grab these suckers for $130 at the pop-up vending machines that Snap has put around major cities. You take 10-second videos with them, like I did on the mountain last weekend, and then it goes straight to your Snapchat app as soon as you connect to Wi-Fi.
And let's just mention for a second that advertisers for a while have been pretty wary about using Snapchat because they are so insistent on vertical video ads when advertisers are much more used to the horizontal shape of TV. But they're warming up to it.
Has it worked? Well, the true test will come in the years after Snap goes public because their revenue model is still only a couple of years old.
That was Bloomberg's Sarah Fry and Alex Barinka. Coming up, Fitbit struggling to maintain momentum for its fitness tracker, and the stock taking a big hit this week. More details ahead. Plus, we'll dive into Apple earnings out this week. CEO Tim Cook said on the earnings call that the company's services business, which covers things like iTunes and Apple Pay, will be the size of a Fortune 100 business in 2017. Here he is with more. This is Bloomberg.
It was our best quarter ever for services, with almost $7.2 billion in revenue. App Store customers broke all-time records during the holiday quarter, including $3 billion in purchases in December alone, making it the App Store's single best month ever.
A stock we're watching, Fitbit, had a rough week, plunging almost 16% in Monday trading. The company is eliminating about 6% of its workforce. That's 110 jobs because of falling demand. The fitness tracker is forecasting that full-year revenue grew about 17% in 2016, but that's down from a previous forecast of 26%. And another big mover of the week, Apple shares popped after reporting first quarter revenue of just under $78.5 billion. That's up 3% year over year. Also encouraging investors, a beat on iPhone unit sales. Apple sold over 78 million units in the quarter due to strong demand for the iPhone 7. And its services business, which includes iTunes and Apple Pay, saw 18% revenue growth year over year. Julie Osk, principal analyst with Forrester Research, joined us with more.
iPhone sales make up the majority of Apple's revenue at this time. And while we look at global smartphone subscribers, that number is going to grow about 50% over the next 5 years, so that's a big number. But as we all know, Apple makes a lot of money selling phones, unlike some of their competitors. And so if we look at the market that they're pursuing, which is more the middle class and upper class, right, that growth curve isn't going to be as high. So when you take all of that into account, it's doubly impressive, the numbers that they've posted for 2016.
I was speaking to Luca Maestri, who's the CFO, and what also really was coming across was they're doubling down on the services area in particular. They say they're going to double the size of this particular unit, which on a standalone basis is as big as a Fortune 100 company. They say they're going to be doubling that over the next 4 years. How much do you think services is the right bet for Apple?
I think it's absolutely the right bet. Certainly until they start selling other home appliances like refrigerators or cars, there's only so many smartphones, Apple TVs, and smartwatches you can sell. And there's a lot of upside in the services business, not only on the media side, but I think there's also some areas like Apple Pay where there's relatively low consumer adoption today of only 11% in the US, but there's a lot of upside in the services market on that side.
Now, it's interesting when you're looking at the other products that they sell, there was a slight slowdown there. The CFO trying to say, look, this is iPods, which we include in that, the Apple TV, which was a new product this time last year. That's going to be a hard comp. But do they need another product? The watch actually starts to be looking like it's selling relatively well, a record fourth quarter for it.
I don't know that they need another product. We also expect to see, if we look at the adoption of smartwatches today, while they're only a fraction of total wearable sales today, they're going to be as large, about 40% of wearable sales within about 5 years. So there's a lot of upside in that market as well, as we move from about 18% of US online adults owning a wearable device today to 29% in just 4 years.
I think what also struck me was the lack of a mention of China this time round, particularly from the CFO. He said Brazil's going really well, Turkey's going really well. China does seem to be a slowdown area. Are they right to be focusing so much on China or switching attention to India a little bit more?
So I go back to the point is Apple makes a lot of money selling phones. They're profitable and they want to sell phones profitably. And you have to look at the markets where there's the most upside. In a market like China that's very crowded with low-cost Android producers, that's a tougher market for them. But I think they've done well, so far. But not where their biggest growth will probably come from.
And would India be the right sort of country, given that, the average earnings power in India is less than China? Do they have as much of an opportunity in that country, do you think?
So I think there's almost more of an opportunity in India. If we look at the growth in smartphone adoption in China, that'll grow by about 50% over the next 5 years. But in India, that will almost double. And if you look at each of these markets of about 1 billion people, the middle class and the upper class are still very, very large markets, even bigger than the United States in each of these markets. A lot of upside.
That was Julie Osk, principal analyst with Forrester Research. And staying with Apple, a Bloomberg scoop. The company is designing a new chip for future Mac laptops. The new chips would take on more of the functionality currently handled by Intel processors, according to people familiar with the matter. And the chips are already being used in the latest MacBook Pro. Still ahead, Facebook earnings out this week, and mobile ads continue to dominate the company's revenue. We'll break down all the numbers next. Now, Now to Facebook earnings. The company reported a 51% jump in sales to $8.8 billion on Wednesday, topping analyst projections. The big driver? Advertisers continue to push to reach consumers on mobile phones. The social network's user base is continuing to grow. It reported just under 2 billion monthly active users and 1.75 billion users accessing the platform on their smartphones. Now, this move solidifies Facebook's position in the market for mobile advertising, just behind Alphabet's Google. We caught up with Melissa Parrish, Forrester Research Director, and David Kirkpatrick, CEO of Techonomy and Bloomberg contributor.
I'm sure there are some people out there who would be upset that the numbers aren't even better than they are. But I mean, come on. I think analysts were expecting some incredible results, and pretty much everything beat it. We have 25% of the world's population using the platform on a monthly basis. I can't see any clouds there.
Just amazing. Yeah, on a daily basis, 3 times the US population. That is just phenomenal. 1.2 billion people addicted to this particular app. David, dig into the growth drivers here. When I was speaking to the CFO on the call, David Wayno really was trying to point out that it's businesses getting mobile with not only Facebook, about 65 million business pages, but now 5 million Instagram. That's big growth.
Well, I think they're doing superbly on mobile, but when I look at growth drivers and I think of where their real prospects are going forward, it's the truly global nature of their business. And if you look at the growth they're seeing in Asia and the rest of the world, Africa and Latin America, they are doing surprisingly well. And this has always been where I thought that their long-term really big potential was, because, you know, they make 10 times more per user in the United States than they do in Asia, and yet the opportunity down the road to build those numbers more to parity is real, and so they're getting a much faster user growth in those regions, and they're making somewhat more money per user. So I was really struck their Asian revenue was up 59%. That's really impressive, and the rest of world, that revenue was up 52%. So, you know, even though the numbers are small compared to Europe and the US, this is where the opportunity is long term.
And the potential needs feeding, doesn't it, Melissa? And we're hearing the CFO again telling me they're not backing away from their view that they need to spend aggressively. It seemed to be the headcount in particular they're ramping up about, well, more than 34% in the fourth quarter. And they say they're going to accelerate that even more in 2017. Are they spending wisely?
I think so. I mean, to achieve any kind of innovation, whether you're talking about ad products or global expansion, you have to have the resources to do it. And if you've got the cash, you know, that's where to spend it. I think, you know, the idea of ad product innovation goes hand in hand with feature set innovation. So you got to give something to the users to keep them engaged, and that's going to change as they continue to grow in global markets as well. The expectations for a social platform in Asia are actually quite different than the expectations in the US and the UK and the rest of Europe. So I think you have to invest smartly, and you've got to get the best engineers to do it. So yeah, I do think it's smart.
And David, what about the move to video? Video was really what Sheryl Sandberg, what Mark Zuckerberg had been really bigging up over the past few years. Still mobile, still video. And there was a Wall Street Journal piece out saying, look, they might be even developing a TV app. Is still video where it's hot?
Well, I think that's where they can really compensate for this problem that even they've acknowledged, that they've really sort of saturated our news feeds with as many ads as we're likely to be able to handle, particularly on mobile. So either they have to charge more per ad, they have to grow their user base so they can show more people ads, or they've got to find other kinds of ads that make more money. And I think video ads can do that. I thought that journal piece suggesting they could have a set-top box app was really interesting, a TV app that, to me, it was a little unclear how it might work, but my own guess is down the road they'd really like to have some kind of app that allows you to really watch TV in all the ways we watch TV and still really be on Facebook in a fundamental way on your TV. They've tried various versions of this in the past and it hasn't really worked, but if they could make that work, then they could find new ways to show us ads while we're watching TV, and they could just start raking in even more dough.
In fact, Mark Zuckerberg just on the analyst call right now saying that he will seek original content deals and he's still putting video first. Melissa, I'm going to find a cloud amid all this silver lining because earlier today it looks as though Facebook did lose out in the courts. It looks as though Oculus, it was ruled, potentially was built upon stolen technology. $500 million, the damages they're going to have to pay. That's about a quarter of the price tag of Oculus when they bought it in 2014. Is this a particular concern?
Oh gosh, I don't know. I mean, I think of course it's a concern, right? It is a court ruling that's going to hit a pocketbook, and that's always a concern. I don't want to minimize that. And of course, Oculus being an engine for innovation, anything that questions its source code is going to be of concern. But 500 million is something that I'm sure will continue to be litigated for a while versus the kind of growth that we're seeing for the core platform. I'm sure it's a concern. Is it a deal breaker? I can't really see it as being that.
And David, what about the fake news and how Mark Zuckerberg himself has been trying to respond to this, potentially a little awkwardly to begin with, but now with some fervour, and indeed trying to perhaps orchestrate the way in which he interacts with his own user base nowadays?
Well, I think that it continues to be an issue of concern to the intelligentsia. It is not a concern to the average Facebook user. I think mostly they just want to be entertained and diverted, and they are. I do think Facebook is taking the issue very seriously. I think you're going to see them take more and more measures to try to avoid seeming to kind of compound the partisanship that's really so big a problem in so many societies around the world. The problem they have is that they are so global, they're operating in so many different languages, that this problem really is global. Even the Russian interference in the media is global. So, you know, it's not going to be that easy for Facebook to really get a grip on this right away. I think they will over time. Could I quickly on Oculus? You know, I think Oculus is something that maybe is starting to look like they overpaid for, unlike Instagram, where they got a spectacular deal. And I also think, you know, Palmer Luckey, who may be the guy that maybe gets some of the blame for this lawsuit loss, also had some pretty embarrassing behavior around politics and his own public statements, and it may be that they are regretting a little bit their association with him. On the other hand, they've now brought Hugo Barra in from Xiaomi to take over Oculus, and I think he'll be a great leader for that part of the company.
That was Melissa Parrish, Forrester Research Director, and David Kirkpatrick, CEO of Techonomy. Coming up, tech mobilizes against the travel ban. We'll cut through the chaos and the confusion and analyze the vocal opposition streaming out of Silicon Valley. And a reminder that all episodes of Bloomberg Technology are now live streaming on Twitter. Check us out. It's at Bloomberg Tech TV, weekdays at 5 p.m. in New York, 2 p.m. in San Francisco. This is Bloomberg. Welcome back to the best of Bloomberg Technology. I'm Caroline Hyde. Now, Silicon Valley finds its voice as President Trump's immigration ban fuels outrage across the tech sector. Trump signed an executive order restricting immigrants from 7 predominantly Muslim countries. By Monday, Bloomberg reported that Trump's next order on immigration may be an even greater blow to U.S. tech, targeting the work visas that the likes of Google and Apple use to recruit talent overseas. On Monday, White House Press Secretary Sean Spicer addressed the reform efforts.
You've already seen a lot of action on immigration, and I think whether it's that or the spousal visas or other type of visas, I think there's an overall need to look at all of these programs, and you'll see both through executive action and through comprehensive legislative measures a way to address immigration as a whole and the visa program.
We caught up with Bloomberg Politics White House team leader Alex Wayne in Washington for more.
this H-1B order, if it comes, is a much bigger threat to Silicon Valley than the order that Trump issued on Friday. Although I think this H-1B visa order could be more popular among average Americans than the immigration order on Friday. There's been, especially in Congress, among Republicans and some Democrats in Congress, there's been concern that tech companies have abused the H-1B process. They've used it to recruit overseas engineers at the expense of American ones, and essentially use the H-1B to suppress salaries for tech workers here in the U.S.
I mean, we're just seeing pictures of the protests that occurred over the weekend. There has been some fighting talk coming back from President Trump about the reasoning behind these particular demonstrations, perhaps the chaos that we saw in the airports.
For sure. He says that this order was entirely aimed at making the U.S. safer. He's compared it to a review of Iraqi refugee, the flow of Iraqi refugees from that country in 2011 by President Barack Obama. But there are some key differences. In 2011, the Obama administration said that they had specific credible evidence that Iraqi nationals might be planning terrorist attacks in the U.S. And in fact, two Iraqi refugees were arrested in Kentucky shortly before Obama issued that order. In this case, the Trump administration hasn't offered any evidence or even asserted that there's a specific credible threat to the United States. They've simply imposed this order and claimed that it has to be in place for security reasons.
Fascinating analysis. Bloomberg's White House team leader, Alex Wayne. Thank you for being with us, as ever. Now, US tech leaders came together in a unified anger over the weekend in response to President Trump's immigration order. Bloomberg's Caitlin Meehan has this recap of, well, who's said what so far.
Facebook CEO Mark Zuckerberg was one of the first tech leaders to speak out. In a post on Friday, he wrote, "Like many of you, I'm concerned about the impact of the recent executive orders signed by President Trump. We need to keep this country safe, but we should do that by focusing on people who actually pose a threat." Netflix CEO Reed Hastings wrote the next day, "Trump's actions are hurting Netflix employees around the world and are so un-American, it pains us all." Uber's statements appeared to grow in intensity over the weekend. This after early backlash to surge pricing at JFK Airport amid protests and a taxi strike. CEO Travis Kalanick tweeted, "The travel ban is against everything Uber stands for. Any driver who can't work because of the ban will be compensated for lost earnings. We've set up a $3 million legal defense fund as well." Rival Lyft also promising to donate $1 million over 4 years to the ACLU. And Airbnb CEO Brian Chesky offering free housing to refugees and anyone not allowed in the U.S. Elon Musk also weighed in. Remember, the Tesla and SpaceX CEO was born in South Africa. He tweeted, "The blanket entry ban on citizens from certain primarily Muslim countries is not the best way to address the country's challenges." But he went on to ask followers to read the immigration order, saying, "Let me know specific amendments. We'll seek advisory council consensus and present to the president." At least half of the top 20 U.S. tech companies were founded or are currently led by an immigrant. Among those, Microsoft CEO Satya Nadella, Google CEO Sundar Pichai, and Apple CEO Tim Cook, all issuing statements condemning the travel ban and supporting their immigrant employees.
That was Bloomberg's Caitlin Meehan. Now, for more on the tech industry impact of President Trump's immigration order, I want to bring in Bloomberg Technology Senior Executive Editor of Global Tech Coverage, Brad Stone, and live from Tokyo, it's Bloomberg's Managing Editor of Asia Tech Coverage, Peter Elstrom. Brad, first to you. We're really seeing tech stand up unified in anger, it seems.
Oh my God, this is a massive political repudiation of the Trump administration. And I think two things are going on here. One is, as Caitlin said, Silicon Valley derives an enormous strength from immigrants, going back to Andy Grove at Intel, to Satya Nadella at Microsoft. Number two, these are blue state companies, and their employees, by and large, did not want to see Donald Trump president. They are reacting, very negatively to this immigration executive order, and I think they're putting a lot of pressure on their leaders to come out and take a stand.
Fascinating. Many citing, of course, Steve Jobs himself was son of a Syrian. Peter, dig into us where we go next, because there's much concern building among those very same tech leaders that next is going to be the visas that are going to be analysed and maybe executive ordered against.
That's right. Yeah, there are these work visas that are very popular with tech companies. They help to be able to bring in workers from around the world, either for short-term or for longer-term assignments. And to be clear, maybe it's good to begin with a caveat. What we saw is a draft of an executive order. It hasn't been signed by President Trump. It may be modified before it's actually signed into law. But there are a couple things that are very clear. One, the work visa programs as they exist right now do not work to the original purpose of their legislation. And two, the changes are consistent with the kind of populist statements that President Trump has made. It looks like Trump and Congress are going to look at a variety of reforms aimed in the direction of giving American workers more priority and then paying the workers who come in from outside more money instead of bringing in lower wage workers, trying to pay them more.
And Brad, I mean, what seems so interesting here, yet perhaps more fuel to the fire for many of those tech leaders, Peter was spelling out for us. And there were some olive branches to begin with. It was only December the 14th that we saw the tech leaders in the room with Donald Trump. Is all that going to unwind?
No, not at all. I mean, this is why we keep seeing Eric Schmidt, going to the White House, going to Trump Tower. Why executives like Elon Musk and Travis Kalanick of Uber see the need to be on the Business Council despite the PR price that they are paying among their employees and some of their customers for being affiliated with Trump. They want a seat at the table. They want to push their agendas. The H-1B visa program is prized in Silicon Valley, and they want to maintain it. And so that's why they're trying to advocate on their own behalf.
Peter, is there any update as to the timing of this? I know you said as yet the executive power is perhaps not quite as strong on this front, but could we see it as soon as this week?
Well, there's speculation about it coming relatively soon. It'll be difficult to tell, given the backlash against the original executive order on immigration. It's not clear whether that will take additional time. I do think that you're going to see a split, though, over the H-1B issue between the U.S. tech companies that are recruiting highly paid workers from overseas to work on kind of specialized assignments and the outsourcing companies, which have typically brought in workers that are paid less money. And I think the reforms are aimed at trying to split those two and looking at the differences between them. If there are fewer visas that go to the outsourcing companies, that actually means there may be more available to the Apples and the Googles and the other tech companies that are bringing in specialized work. And
just lastly, Brad, when we're looking at some of the actions that we're seeing, I mean, Brian Chesky looking at donations, in particular to the ACLU, that seems to be an interesting tack that some of the leaders in tech community are taking, perhaps not speaking out directly against President Trump, but perhaps trying to put in place help for those, particularly their own workers.
Yeah, not to interpret it all cynically, but you're seeing tech CEOs really strive to kind of demonstrate their bona fides. And so, with that donation, that pledge of support of refugees, Brian Chesky kind of hit a home run. Lyft donated $1 million to the ACLU. They kind of hit a home run. And then poor, sad Uber, kind of stumbling. There's not a lot of rationality behind this delete Uber campaign that we're seeing on Twitter right now. But, people just sort of, the sort of anti-Trump crowd concluded that they weren't being strident enough in their communications on the immigration executive order, and here they are kind of stumbling to strengthen their own statement. So a little bit of optics at play here.
Now, we heard from yet another big tech voice on President Trump's travel ban this week, this time a view from Canada. On Monday, Bloomberg TV Canada caught up with BlackBerry CEO John Chen, a Republican who advised President George W. Bush. He shared his views on why he opposes the ban. Take a listen.
I understand the reasons of protecting the U.S. In terms of safety and of the country, but I thought this is quite an extreme move, and one that came quite suddenly.
Chen later said that the travel restrictions were too broad and confusing to be successfully implemented. Still ahead, our exclusive conversation with General Electric CEO Jeff Immelt. You won't want to miss it. And if you like Bloomberg News, well, check us out on the radio. You can now listen on the Bloomberg Radio app, Bloomberg.com, and in the US on SiriusXM. This is Bloomberg. After a long courtship, Snap has chosen a suitor. The maker of messaging app Snapchat plans to list shares on the New York Stock Exchange instead of the Nasdaq when it goes public this year. And that's according to a person familiar with the matter. More tech firms are going with the NYSE after technical glitches at Nasdaq impacted Facebook's trading debut. Now, General Electric has recently been focusing in on software and analytics. So what can we expect from the industrial company in the near future? General Electric Chairman and CEO Jeff Immelt sat down with Bloomberg's Editor-in-Chief John Micklethwaite for an exclusive interview at Bloomberg's bureau in Boston. Take a listen.
It wasn't an initiative to be in the software business per se. It was more the recognition that, our new jet engines have a couple hundred sensors on them. They provide this continuous stream of data. We made the decision that we want to model that data on behalf of our customers, not relegate it to somebody else. That led us back into the chain of adding software talent, building a software platform. So our theory, John, is that every industrial company is going to have to be a digital and software company. We wanted to lead that kind of path, and that's how we've invested.
Do you feel at home with that? I mean, GE is still a...
I've had to relearn. In other words, I think one of the things when you're running GE is you always have to say, why not us? It's kind of like, what's next? Let's try. And so we brought in a lot of people from the industry to help us. But myself, I've had to kind of learn new ideas on technology.
Loosen your tie.
Exactly.
But all the same, but there is that. But how do you deal with that? GE is one of those companies which has got a famously strong culture.
Yeah.
That strong one-day hockey playing element, which is not exactly the same as what you find.
We've had to change. Again, I think you've got to recruit the talent. So you're never gonna hope to do that. And then you have to get people that are comfortable with the kind of speed and culture that Silicon Valley, the way people get paid, the pace at which you have to go. People have to learn to live in a kind of a horizontal and vertical world at the same time, which is hard. But then we also have to bring the digital people. Look, if you're in an airplane at 35,000 feet, do you want to think that people that made that engine quit their company every 5 years?
No.
So you've got to bring a little bit of the industrial thinking into the digital realm at the same time.
What would GE look like in 20 years' time? I mean,
look, I think we're going to be, kind of still have an industrial core, but we're going to be a big software player in 20 years' time. We're going to be deep. I would say, I don't know that we're going to be broader as a company. I don't know that we're going to be in more industries, but we're going to be much deeper. We're going to go from information all the way through how things get made. So I think you're going to see a GE that's deeper, maybe not broader.
So deeper into individual, so the same industries, aircraft,
but doing analytics, making the parts through additive manufacturing, right? That to me is more value content in the industries we serve.
Do you see 3D printing, and that we mentioned it a couple of times?
Is that massively transformative? I really do. Now, getting back to your global point, one of the things about analytics and additive manufacturing is it kind of democratizes the supply chain. So it basically says you can do in a factory with 300 or 400 or 500 people what it used to take you 2,000 people to do. So that's another thing to factor in. But we are investing in both of these in a substantial way.
One of the great, I think I even pestered you about this 16 years ago, the idea of a conglomerate. You sit there, you're now a much more sort of focused company, with perhaps the arguable exception of the one you used to run, the medical services bit. That seems a little bit more separate to the rest of it. Is that fair?
Well, it's really the genesis of our medical business all comes from the Global Research Center. So we basically invented the X-ray tube 100 years ago. All the life sciences stuff we do comes out of our research centers. So we kind of see healthcare as part of the package, but all of which rests on, kind of a common core that we call the GE store. Yeah.
And is the core of GE still that management ethos? Is it still taking people back to the...
I think management is key. I think you always have to be good at culture and leadership. But one of the things today is nothing's general anymore. In other words, when I first became CEO, we were in pet insurance, media, we made jet engines. That's too hard today. I think you've got to have this combination of depth and breadth, and you've got to have managers that are maybe more technical, know domains better. So I think that we've had to reshape leadership and culture.
You mean the old system of somebody at GE going to work at NBC and then going to work in medical services and shifting around? I
think it's much more constrained today. We still want people to be broad, but they also have to be deep, or else you can't pick the right ideas. You can't drive the kind of change that's required.
That was GE Chairman and CEO Jeff Immelt speaking with Bloomberg Editor-in-Chief John Micklethwaite. Coming up, Uber's CEO slams on the brakes, calling it quits on Trump's Economic Advisory Council. All the details ahead. This is Bloomberg. France has issued an ultimatum to Uber: pay drivers more or risk new legislation that would set a minimum wage equivalent for drivers. The country wants an agreement in place as early as next week between the ride-sharing company and the drivers' unions, staging protests for better pay. A mediator has been appointed to coordinate discussions. If talks fail, well, France will recommend a legal minimum for driver pay based on time and distance travelled. Meantime, Uber CEO Travis Kalanick quit Trump's Business Advisory Council this week. This after drivers for the ride-sharing service started a petition on Thursday calling for Kalanick to step down from the president's advisory committee. Kalanick's participation on the council prompted blowback on social media following President Trump's controversial executive order on immigration. It snowballed into a hashtag Delete Uber campaign. We spoke with Bloomberg's Eric Newcomer, who covers the company.
It's been a PR disaster for Uber. I mean, they got a lot of blame for seeming, I guess, like sort of collaborators by joining this advisory council. Elon Musk, Ginny Rometty are also on it, but the backlash for Uber has been strong.
It feels almost rather unfair in that respect that other CEOs and leaders haven't had this sort of backlash. And it also was swept up with the time that Uber continued to service JFK Airport during other taxis striking. But it's worth noting that Lyft continued to service as well. It feels that this is literally almost a storm that it failed to deal with properly.
Yeah, there were a lot of factors. I think Uber started off with sort of a bad and combative reputation, so it didn't have a lot of goodwill with people. I think it also underestimated how much, it's a product that exists in big cities where many of, its users are out in the streets for these protests, so it underestimated how strong a stance it needed to take given the demographics of its own users.
We did hear, though, from Travis Kalanick promising to put forward concerns from users to the president directly. What can he do now if he's not on the advisory council?
Yeah, it's a bit of an about face on that. He did speak with Trump. We haven't figured out exactly what the two said, but he won't be able to attend the advisory meeting. Like you said, he won't be able to sort of voice those concerns.
That was Bloomberg's Eric Newcomer. We also caught up with Brad Stone of Bloomberg Technology, who's been following both Uber and Airbnb for years and has written all about them in his latest book, The Upstarts: How Uber, Airbnb and the killer companies of Silicon Valley are changing the world.
It really is remarkable how these two companies started exactly 8 years ago. That both sets of founders were kicking around at the inauguration of Barack Obama, talking about their crazy ideas. And the book kind of intertwines the two stories, very similar, very representative of this last wave of Silicon Valley innovation. And unlike the previous tech franchises of the past, like Facebook and Microsoft and Google, it was a fight for both companies in every city. And, I kind of chronicle how they did it and why these CEOs had to be a little different. They're not the introverted technologists, but they're storytellers. And they had to kind of leash together these political coalitions. Travis Kalanick of Uber, Brian Chesky of Airbnb, bring their customers to support them to basically create these international companies.
And you say about how their characters were different, perhaps from the founders of Google and Microsoft and Apple. They were more extrovert, and that didn't always sit well with some of the big investors. Who lost out here? Who won?
Well, and that was fascinating for me. We consider venture capitalists to be the kind of soothsayers of our world, and yet it's hard for them to see the future as well. 150 of 165 investors who got an email in 2010 about a company called UberCab and an opportunity to invest did not even reply to the email. It seemed different. It seemed like it was going to be a fight. The CEOs seemed different. They weren't sure. Investors weren't sure that they could trust Travis Kalanick. He had a reputation as a little bit of a pugilist. Well, it turns out that's exactly what you needed. And so a lot of people kind of embarrassed to say that they missed out on these huge companies.
Interesting now that Travis Kalanick himself is well, perhaps not always trustworthy by some of those outside of Silicon Valley, but he is aligning himself with Donald Trump to a certain extent, helping be on the advisory panel, for example. They aren't afraid to rub up very close to authority, and sometimes seems now work with them.
Well, let's be clear about what's going on, because this is the source of the backlash, the Delete Uber campaign. Travis is on this business advisory council along with Elon Musk and the CEOs of IBM and GM and Nike. It's a big group, and they want a seat at the table. I don't think it's all that unusual. And yet, we have to say that, people have a little bit of an ambivalent relationship with Uber. They seem to be willing to expect the worst from it for whatever reason, that probably a lot of the history that I lay out in my book. And through almost a sort of misunderstanding over the weekend, because Uber was facilitating rides to JFK, so was Lyft and Juno, frankly, for that matter. They don't tell their drivers what to do, but nevertheless, they tweeted a message saying that they were not going to turn on surge pricing. Nevertheless, it was construed as an advertisement, and now we have this mess of an anti-Uber campaign right now.
Yeah, and it's something that you document in your book very well, as sometimes perhaps a few PR masterstrokes gone wrong when it comes to Uber. But what I'm fascinated about now is the new administration. If we think about it, well, Airbnb is actually a threat to one of Donald Trump's own business lines. You've got Uber. How much has he spoken to or for or against these particular startups or upstarts?
Yeah, I mean, Donald Trump is, of course, probably the world's most visible hotelier. So perhaps not a great position for Airbnb. They were pretty closely aligned with the Obama administration. Brian Chesky had a relationship with the president. And yet, the challenges these companies have faced have been fundamentally local. It is cities and states that are governing their future. So I think the threat with Trump is he could get on his Twitter soapbox and maybe, create some problems for the likes of an Airbnb. It would be a conflict of interest because he does own hotel properties, but that has not stopped their president in the past. But I think, it's one of the reasons why we see Travis of Uber stay on the business council despite the PR hit. They want a seat at the table. They want to further their agenda. Elon's on that council as well. He's got an agenda as it relates to, alternative energy. He doesn't get the criticism, and Uber does because it's high profile.
And that does it for this edition of the Best of Bloomberg Technology. We'll bring you all the latest in tech throughout the week. Tune in each day, 5 p.m. New York, 2 p.m. San Francisco, and 6 a.m. in Hong Kong. Do not miss our interview with AOL CEO Tim Armstrong this Tuesday. Remember, all episodes of Bloomberg Technology are now live streaming on Twitter. Check us out at Bloomberg Tech TV weekdays. That's all for now. This is Bloomberg.